Good afternoon, George Cavaligos. Holy cow, guys, what a day. Number comes out a little bit worse than expected. They revised the last couple months' numbers higher, so in essence, I thought it was a wash. Market rallied a little bit initially. I thought we'd see something like, a little bit of relief. Massive volume came into the market. We actually did 2.2 million 10-years today, and 700,000 bonds. Those are big numbers. I got to look far back here, but my charts go back like a year and some change. That's the most volume I've seen in that year and some change. And the market rallied hard too. We took out the early highs from earlier. The highs from earlier this week, and we just blew out all kinds of stops. I had caught a quick short on the initial pop and covered, for a couple tick winner, and then I tried to short it again and scratched it just because it wasn't going down, and boy, I dodged a huge bullet with that one. And then I don't understand the big rally. Why the short covering? Obviously it was from big guys. It was massive volume. All kinds of puts being sold, that's it, blah, blah, blah. And it's been tough, to hang with a short position. Fed's in buying every day, and, our government's a mess, and, nothing's working right. Nevertheless, equities are making new highs, and the yen's on its lows, and the euro's on its highs, and, all the things that point to lower bond prices. You had to either stand up and say, okay, we're going to go meet the 131.30 618 fib retracement. We got up to, oh God, what was the high? I can't even remember. 27. Figured, okay, another 3 ticks. They should be able to do that. Try a short up there. Had pretty good resistance in the bonds at that 144.11 area, and it was just sitting up there for a while, thinking, all right, it's going to go higher. And then equities just started running and rallying, and we just kept trading down more and more and more, and it was, a frightening thing to behold. And it just sort of decayed slowly throughout the day, all the way down, this slow rot. I don't think there was a bounce of more than 3 ticks in the 10-year, and maybe more than 10 ticks in the bonds all day. We ended up closing on the lows. Made new lows in the bonds actually for whatever this recent move has been. The 10-years traded 3,300 contracts at the low at 130.30. I thought for sure they were going to go and make new lows, and it bounced as soon as the equities stopped trading. They closed the equities, and the 10-years bounced back up. We're trading like 02 right now with 15 minutes after the equities closed. I gotta imagine we're gonna take out that 130.30 level at some point, whether it's Sunday night. We don't have a lot of data next week, and it's kind of odd. There's not a lot to drive things here. There is some important data overseas, especially early in the week. I think there's some big numbers coming out of Australia, China this weekend, and Japan, so we'll have to keep an eye on that. And it's going to be an interesting trade here. Bonds got down to 142.14. I'm still looking for that 142.03 to 05, the big fib retracement down there. And I keep thinking we're going to get the 10-years down around 130.18, 130.22, and kind of meet the C equals A objective there and call it a day. At this point, I'm hoping that we can have somewhat of a stable weekend. We open up, we're trading like 2-3 right now. I'd love to try and take a shot on the short side against that. While the big volume today was way up there, the big volume on the way down was 03 plus 04. A lot traded around 03. The next big cluster of volume, you have to go all the way up towards 15 to 17. So we traded a ton of volume up near the highs, and we traded a ton of volume down near the lows. I'm not comfortable with a double distribution trade like that. I think you want to sell rallies is the bottom line, is what I'm trying to say here. And you might even want to just have a small short on over the weekend here. We're still bouncing a little bit, 2.5 right now. Previous high, I want to say, was, if you look at it like a short-term chart, we had bounced all the way up to 05. So if we can get them up to 05, I'd take a shot on the short side there. Looking for a lower low, probably try to cover around that 22, 23 area on Sunday night, Monday morning. Interesting week. It was a decent week. Didn't trade as much as I could have today. I was in and out of meetings and on phone calls and stuff. I'm really sorry. I shouldn't schedule anything on unemployment numbers. Unfortunately, the lawyers that I'm dealing with right now, they don't know what unemployment number is for traders. I should have been more forceful, I guess, and bailed on them and postponed the meeting. A big day like this, we could have had a great month under our belts already. Hopefully, you guys were able to catch some of this sell-off, and I promise to not schedule meetings for unemployment numbers ever again. So have a great weekend. Take a shot on a bounce Sunday night if you get one. Again, that 131.05 level is an immediate target on the 10 years. And the previous bounce on the bonds was 142.29. Maybe that'd be a good shot. Take a little short position. They're trading 22.23 right now. Bouncing a little bit here in the after session. We got another half hour of Globex, and I gotta imagine the lows are intact for the day right now, and we'll see what happens Sunday night. I'll be on the Twitter, obviously. It's gonna be an important early part of the week next week. No auctions next week beyond the usual T-bills. Not a lot of U.S. based data, and no auctions of note until the week after next. So we're really going to be focusing on the currencies. Keep an eye on the yen, new lows today, new highs in the euro. Those are, I think, the driving forces for the treasuries right now, and we'll have to continue to watch those. Have a great weekend, guys. Thanks much. See ya on Sunday night.